The market is volatile, the stocks keep going down. Then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.
Man, welcome to another episode of the First Fruit Stock Club podcast. Yeah, how's everybody doing out there? I had to take the week off, was traveling, got some good information, but I'm back at it. I hope everyone's having a great 2 weeks and having a great week so far. We're in hump day, and man, it's always good to just be thankful for where we are. Man, I got a few topics I'm going to discuss today in the market this week. Swing trading end of June, right? We're at the end of June, and the First Fruit Stock Club is a club based on swing traders. If you don't know what swing trading is basically trading stocks or options. Basically, trading stocks or options where we look at to exit anytime. The exit could be 1 week, 1 day, or even 6 months out. So we use leap options to do that. So man, it's been a lot going on in the market. So today I just want to go through a few topics. Man, I'm going to discuss week 4 negative market communications. I'm not going to get into reports to watch. But one thing I'm going to discuss is you should have bought SpaceX at the IPO, right? I know a lot of people saying, no, you shouldn't buy it. I'm going to have a little presentation for you of buying SpaceX at the IPO, right? And I thought I uploaded the SpaceX option, but I wanted to look at that. Micron just reported earnings. They are up, so discuss that and semis. And these are some of the trades that the club is in right now. I'm gonna go in and give you my perspective on these particular topics. But first, before we begin, let me do the disclaimer. The information provided in the First Fruit Stock Club podcast is for education and information purposes only. It should not be considered financial, investment, tax, or legal advice. The views expressed by the host and the guests are their own and do not reflect the opinions of any financial institution or regulatory authority. Investing in stocks and other securities carries risk, including the potential loss of principal. Past performance is not indicative of future results. Always conduct your own research and consult with a licensed financial professional before making investment decisions. The First Fruit Stock Club and its affiliates do not guarantee any specific outcomes or returns. By listening to this podcast, you acknowledge that you are responsible for your own investment decisions. Man, and also ask guys, please like, subscribe, and share information on this show. Great information. I do take time out, and it's important, man. Financial information is important. A lot of people don't have it. A lot of people are not aware that they need it. So check it out. All right. So look, in the markets, the Dow Jones Industrial Average from June 10th, we had a drop, and this is a outlook for the month. June 10th was a rough one, but as you see, we bounced back. We hit the low of 49,920.20, and we've been up ever since in the Dow Jones Industrial Average. S&P 500, also that June 10th date, where we just had some market interruptions. Once again, 726. But man, we trended up for a hot second, but man, the S&P is now trending down, right? So we look at it down, we have lower lows. So now we're trending down. And you have the NASDAQ, which is our favorite, also trending down. Okay. So but I think tomorrow is going to be a great day. Like I said, Micron just reported earnings. In the club, we Micron and Semis have been two of our top picks. Let's see, SMH. All right, we don't trade SMH. We trade um, other ETFs. But just to give you a figure of SMH, and these are after hours. So the SMH is tracks is a ETF filled with semiconductor chip companies um, such as Nvidia and AMD, and all the top chip companies are filled with SMH. And SMH, especially today, if you had some trades on SMH on the 10th, you made some money. We have a particular trade that we use to trade the semis, and it's been on fire. I think I've been high as up to 300% on that trade. And but what it's a little bit lower now, just for the fact of I have every time it peels back, man, I'm buying. So if you're not in the semis, right? If you're not investing in semiconductor chips, that's where the money is going. That's where the trades are going right now. And so you really need to look at that. Um, and anytime it's like everybody's, heard the term right now is buying a dip. And anytime it dips, and this proves it. If you go back, look at that dip. If you're trading stocks inside the Dow Jones Industrial Average, right? You made money. Look at the dip. S&P 500, you made money. Now you had to sell out, but you made money. The NASDAQ, right? If you bought that dip, you're making money. The dip trade is working and will continue to work. But you do have to buy the best stocks, the best companies right now. And the best are um, semiconductor chips, memory, such as Micron. I like Micron. And like I said, we like these stocks, but we have different products that we use in the club to get maximum profits out of these trades. But if you're doing it by yourself, you need to look at semiconductors and chips. So the next topic I say is, SpaceX has been a big topic, and people were wondering um, whether they should have bought it or should they bought it at the IPO. And a lot of people said, don't buy it at the IPO. And I understand what they're saying. Like, makes totally sense because of the lockup periods or whatever. But I'm gonna show you, give a presentation to you, is the jockey matters, right? And when I say the jockey matters, this is a presentation I did. I'm not gonna do the full presentation that I did for the club, but were discussing, and I was like, well, I'm gonna do some research and find out really how do stocks perform after IPO, right? And if you look at the price of SpaceX, if you look at the price SpaceX, um, if you had an E-Trade account or any other account, they were allotting shares to if you had a brokerage account, they were allotting shares, and the shares price was at the initial was basically $135, right? So uh, if you were able to get now you didn't. I mean, we we all were discussing, our orders, and we didn't get our orders filled as much as we wanted, but we did get some of the shares we wanted at $135, which I think is a good price. And I think even 100 between 140 and $160, I don't believe is a bad price for SpaceX. I know everyone's saying, hey, the the earnings is not really generating that much revenue. And I used to be an investor like that until this market, right? And until um, technology kind of took over and really has I say surpassed in regards to looking at value investments. And even SpaceX is definitely far not a value investment, but you're investing for the future and you're also investing in who is running SpaceX, which is Elon Musk, controversial figure. But I mean, it's still when you look at it and the totality of the investment and what the future could be, and that's what investing is all about. Investing is trying to predict the future. And if he's opening up a whole new industry, which is the space industry, right? And he's going to be at the forefront, then you probably need to be invested there. And it's no guarantee. Like the stock could always do horrible. Um, you can look into the future. You look into the future, and you know, Donald, you bought SpaceX, and SpaceX is going down. I believe that the stock will, and I was, and I'm gonna digress for a second. I'm gonna get back on target, but I was telling everyone in the club is that, everyone's really excited. It's like, man, I'm gonna buy, put $30,000 on it. Now, if you could have got the shares at $135, which was the allotted amount, then I would say, but they weren't giving you large groups of shares unless you were a probably, an institution. Not everybody got all the shares they wanted. You asked for, and maybe you got 5% of what you asked for, right? Because it was in demand. It was only 5% of the shares outstanding that was given for everyone. So everyone was trying to get in the shares at $135. But I believe that you will have an opportunity. My price indication for SpaceX is I think you will have an opportunity at like between 110 and between 90 and 110, right? And maybe 115. But I think that if you missed out and you weren't able to get shares at 135, I believe that when the rest of the shares and you have the other shareholders that the who bought it on in a private market, and when they start selling their shares, I think you have an opportunity to buy those shares because the market will be saturated more with more shares, more distribution. I think by the time that happens, I think maybe it'll be a 40% allocation compared to the 5%. So with that allocation, the price will have downward pressure on it. And I believe you will be able to get shares at 110. But what I was telling them is that you want to buy in the opening, okay? But you want to do an opening position. When I teach in a club is we have opening positions. Why do you have an opening position? Position that I define to them is a small position, a small allotment for you to have the stock or the option in your portfolio, and you get a chance to watch the behavior of it, right? So it's not just, well, I'm gonna wait until it drops to um to 90 or because what's going to happen is the market communication is going to be so bad that you probably will miss out on that allocation. And most people will, and they say they're going to buy it when it gets really low, but they're not. And so therefore, you still should add a small portion to your portfolio, and then you can always average down, right? So if you bought it, and I'm not saying buying it at the high because I was telling them do not, 160, 150 is good. I still like it small in a small amount purchasing, right? And this, like I said, it's not financial advice. Like I said, the stock could go to zero, all right, any chance. But I was telling the club is that, if you buy in a small amount and every time it goes down, you just add a couple of shares, shoot a few shares here and there. And I believe, like I said, there will be opportunity in the future where you can get within, 115 to maybe even 90, right? And maybe even lower than that. So the presentation I'm going to get to now is I'm going to show you um, investing with Elon is a long-term thing, right? You cannot have a short-term thing. So I want you guys to think about this, okay? I want to say, how much do you think $1,000 invested in Tesla will be today? All right. I want you to think about that. This is a presentation did for the club. How much you think $1,000 in Tesla will be today? I'm gonna get back and answer that to you. But in order for you to get the return that I'm going to show you, you had to get through this. Went public in 2010. All right. It had a drop of between 30 and 45%. Right. That was the initial drop. We can see that that's all. I mean, there's, ooh, I meant to show you that right out of there. But we can see that, where's space? We can see we've already hit that, the high of $211. And now we're, wow, at $154. Right? So that's a nice drop. That's a nice drop, right? And that hit the high on June 16th. And not only that, I wanted to put the options up here, and I'll put it next week. The options were selling at some of the lowest ones, options that I saw that I tried to find, because you can go through the options chain and find the options. But the lowest options I saw at SpaceX was between $5,000 and $7,000, right? And they have since been cut in half, those options, those contracts, and now is selling at between $2,000 and $3,000. Now it's starting to look kind of attractive to me as some of these SpaceX options, and maybe I'll put one in the club, but I'm still trying to decide. But I started it out, and I told everyone to buy in the beginning, right? But buy small amounts, opening position. Let me tell you where I got the opening position. If you ever look at Warren Buffett, Warren Buffett has since retired from Berkshire Hathaway. But with Warren Buffett, if you looked at his holdings, he would have he would have his core holdings, and then he would have very small holdings of companies. Like, 1% of the company, 0.5%. I mean, not 1% of the company, but 0.5%. Small allocation to his 100% portfolio. Maybe he had 0.5, 0.3%. Very minute and small amount. It was still millions of dollars. Like it'd be like $1 million worth of shares. He would have what's called an opening position, where he would then watch the stock and watch the behavior of the stock. Of course, you do that because also because people follow his trades, and they'll be trying to jump into his trades. But also, it said, I remember in one of the books, he said, look, I wanted to check the behavior of the stock, see how the stock performs, and find the best places to buy. That's what he would do, and have an open position. And I agree with that philosophy totally. Having an open position, buying a few shares, opening up a trade when we're doing a leap option, and buying a few contracts starting out, it allows you just to see the behavior of the stock, and then also see if there will be a bit better entry. Because I tell you, when you a lot of times when you put in a trade, as soon as you press that button, that thing just goes down. By the nature of the market, that's what it is. You got people who are always on the other side of the trade, who wants that trade to go down and wants you to exit out that trade early, and that's how they profit. So you buy here, guess what? Then you sell, and they buy it here and then resell it up for higher. So the nature of the market creates that. So anyway, let me get back on track to what I was on SpaceX. So all in all, I believe if you, this is definitely it's definitely a long term hold. You want to hold it, and you want to put in what I call the long term portfolio. We believe at First Root Stock Club, you have three portfolios. You have a dividend income portfolio that generates monthly income. You have a long term portfolio, and then you also have a option portfolio. So right now, of course, this one doesn't. SpaceX does not generate a lot of dividend income. Doesn't pay a dividend at all. But so therefore, you have it in your and you have it in your option, or you put it in your put it if you want to do an option only, put it in an option account, or put it in your long-term account where you want to hold it. But like I said, I think you'll have an opportunity to buy it either uh, close to the IPO price or below the IPO price in the future. All right, so let me tell you why. So if you had to invest with Elon, you had to deal with these downtrends, right? Um, these drops, 2013 to 14, 40 to 50%, 2014 to 16, 50%, 2017 to 2019 had a drop of 50, Tesla had a drop of 50%. Look at these. February, March 2020 had a drop of 60%. That was one of the greatest buying opportunities of Tesla. Well, it wasn't the greatest. That's not even the longest drop. November 21st through January 2023, Tesla dropped 74%. 74%. So when you look at investing for the long term, and could you handle a 74% drop in the stocks? And I'm gonna tell you, SpaceX might drop 74%. There's a high probability that in the future it will drop 74% from whatever high it will reach. And the question is, are you willing to stand and hold at a 74% drop? Will your emotions be intact? Or will you buy more? All right. Will you buy more? So you have to ask yourself, hey, and everyone talks about, well, if I invested $1,000, but you had to deal with the emotions of looking at your investment and 74% is gone, or at least on paper. Are you emotionally stable to handle that? Do you have people say, hey, in your ear, are you with? Hey, don't do it. Hey, we in for the long term. And not only that, are you willing to put more money in at the 74% market drop? Because the number that I'm going to show you does not include putting money in at the dip. Now we discussed the dips, right? Here's a dip. S&P 500 dip. NASDAQ dip. Right? Dow Jones dip. Are you willing to invest at the dip when the dip comes? And trust me, it's scary. But at the dips are where the life-changing returns come. So the question is, how much would $1,000 invested in Tesla, dealing with all the different dips from 30 to 74% drops every couple of years that you had to deal with? And this doesn't include putting more money in. We're just talking about $1,000 in and just letting it run since 2010. That's when Tesla went IPO. How much would that be? Does anybody know? Can anybody tell me? All right, so I'm gonna reveal it right now. All right. $1,000 at IPO would have been $352,000 today. 1,000 at IPO invested in Tesla would have been $352,000 today. I did not put $1,000 in Tesla at IPO, but I said I'll be darned if I won't put $1,000 in SpaceX at the IPO. At least 1,000, right? And what I'm also going, like I said, that this $1,000, it does not include investing in those dips. All right. The 34%, the 74%, the 50%, 6%. Just imagine if you added another $1,000 to that. I'm gonna have to do the math. Maybe I'll come back next week and answer. Y'all gotta come back next week to get that information. What would have been your return in Tesla investing $1,000 at every 20% drop that Tesla has had? And it was scary moments. I remember the 74%. Everyone thought that Tesla was going out of business. They couldn't refinance it. But somehow Tesla has always come back. So, the question, the $1 million question is, will face, will SpaceX have the same behavior and same performance as Tesla? Right? Will SpaceX have the same performance as Tesla? If I were you, I would not take the chance and decide not to invest in it. And because there's a lot of things you spend $1,000 on and you have no chance of earning 352,000. I'm not saying that SpaceX is going to be hit 352,000. I'm saying you have a chance. I remember, I think I told this story before, where I got my master's degree at Johns Hopkins Carey Business School. It's a great school. Went to school with a lot of great, smart people. And we had a class called investments. One of the first classes I've taken when I was at Hopkins. And one of the projects we were doing is we were analyzing Netflix. And the professor went on and it's like, man, I can't believe that Reed Hastings, the CEO of Netflix at the time, would change from the disc, the disc to streaming. Like he shouldn't have did that. What he didn't know is that Netflix would change the future of TV and has put, if not put a lot of companies out of business or make them merge with other companies, but put tremendous pressure on the other companies that deal with broadcast television by becoming streaming. Everybody has Netflix. And not only that, the real way companies grow is if they're able to raise prices over time. And that ad model, and Netflix has raised prices over time. The changes that they've done. So, man, but Netflix, man, that's one trade I want to get back. I When they decided to back out of the agreement to purchase when they lost the bid, uh, I had it was running, and then Netflix has not been the same after that. But I still hold it long term, so we'll see. But but then again, right, is when the stocks are out of favor, are you willing to hold them? That's the question. That's how you get $352,000 from 1,000. Just think, like I said, you added $1,000 in every time one of those drops. And the reason why I was telling you the story about Netflix, one of the main reasons is because Netflix was an innovator, it was a market leader, it was different. Streaming was new. And I believe that's where we are with SpaceX. So the future will tell. The future will tell if it's a good investment or it's a bust. But the jockey is the same. It started out the same in regards to performance, market performance. It had a drop initially at the IPO, 30 plus percent drop as we saw. And like I said, we will continue to see drops of 30, 40, working with Elon. But somehow he's come on top. So we'll see how that works out. But I believe it will. And I believe every time the stock drops, I will be buying. And I have some for my kids' account as well as my account. And I will be trading options on it. Right. I will put some options in the club. So, man, I hope you guys enjoyed the show. I hope you guys take your wealth seriously. And and man, and if you were able to get in at that $135, I say good job. Right? Good job. Not too late. Like I said, I was telling everyone in the club, you can still buy when it goes down. Like right now, it's down from 211. Now it's down at 150. Like a $60 drop, right? So I would continue to buy shares there. Maybe not a whole lot because I believe that SpaceX will hit close to maybe 115, $90 to 115. I think you'll be able to buy within that range. And even if it doesn't get to that, even near the IPO price or below the IPO price, I think you always win there. The jockey does change. Tesla should be a part of SpaceX, and we'll see. We'll see. We'll see what's going on, man. We are in a revolution in regards to AI, data centers. The business is booming. Will that change when they finally start constructing these data centers? Maybe. Right now, you just have to enjoy the ride and try to buy sound companies that you think are going to have sales. It's all about sales, right? These companies that are around the data centers that contribute to the data centers are really starting to gain steam. That's helping the performance. So there's some places you can look at investing. And man, always, 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 if you're looking for a place to invest, a place to call home where you can get feedback on your investment ideas, you want to take my trades that I give, man, join the First Fruit Stock Club, www.firstfruitstockclub.com. And until then, until once again, thank you guys for joining me. Until next time, man, guys, be fruitful. Peace.
The market is volatile, the stocks keep going down, then boom, we hit new highs. Everything is different now, but you don't gotta chase. Don't panic, don't stress. Time to realign, plan it out, invest. It's the First Fruits Podcast. We elevating with the First Fruits Podcast. No time for waiting, time to grow, give back, reinvest like that. Everything you need to know, the First Fruits Podcast. Let's go.